Rich Dad's Cashflow Quadrant by Robert Kiyosaki. Chapter 12. Step 2. Take control of your cash flow. People who cannot control their cash flow work for those who can. Many people believe that simply making more money will solve their money problems. But, in most cases, it only causes bigger ones. The primary reason most people have money problems is that they were never schooled in the science of cash flow management. They were taught how to read, write, drive cars, and swim, but not how to manage their cash flow. Without this training, they wind up having money problems and then work harder with the belief that more money will solve the problem. As my rich dad often said, more money will not solve the problem if cash flow management is the problem. The most important skill. After your commitment to mind your own business, the next step as the CEO of the business of your life is to take control of your cash flow. If you do not, making more money will not make you richer. In fact, more money makes most people poorer because they often increase their spending and get deeper into debt every time they get a pay raise. Who is smarter, you or your banker? The majority of people do not prepare personal financial statements. At most, they try to balance their checkbooks each month. So congratulate yourself, because you're already ahead of most of your colleagues, simply by completing your financial statement and setting goals for yourself. As CEO of your life, you can learn to be smarter than most people, even your banker. Most people believe that keeping two sets of books is illegal, and that is true in some instances. But if you truly understand the world of finances, there must always be two sets of books. Once you realize this, you will be as smart, and maybe smarter, than your banker. As CEO of your life, always remember these simple words and diagrams from my rich dad, who often said, for every liability you have, you are somebody else's asset. The following is an example of two sets of books, yours and your banker's. As CEO of your life, you must always remember that, for each of your liabilities or debts, you are someone else's asset. That is the real two sets of books accounting. For every liability, such as a mortgage, car loan, school loan, and credit card, you are an employee of the people lending the money. You're working hard to make someone else rich. Good debt and bad debt. Rich Dad often cautioned me about good debt and bad debt. He would often say, every time you owe someone money, you become an employee of their money. If you take out a 30-year loan, you become a 30-year employee, and they do not give you a gold watch when the debt is retired. Rich Dad did borrow money, but he did his best to not become the person who paid for his loans. He would explain to Mike and me that good debt was debt someone else paid for you. Bad debt was debt that you paid for with your own sweat and blood. That is why he loved rental properties. He encouraged me to buy rental real estate because the bank gives you the loan, but your tenant pays for it. Income and expense. Not only do the two sets of books apply to assets and liabilities, but they also apply to income and expenses. The more complete verbal lesson from my rich dad was this: for most every liability, there must be an asset, but they don't appear on the same set of financial statements. For every expense, there must also be income, and again, they do not appear on the same set of financial statements. This simple drawing will make that lesson clearer. The financial fast track and the rat race. The concept of two sets of books can be used to show you the financial fast track and the rat race. There are many different types of financial fast tracks. The diagram below is one of the most common. It is the track between a creditor and a debtor. It is simplified, but if you take the time to study it, your mind will begin to see what most people's eyes do not. You will see the relationship between the rich and the poor, the haves and have-nots, the borrowers and lenders, those who create jobs and those who look for jobs. The creditor will often say, because of your good credit, we'd like to offer you a bill consolidation loan, or would you like to open a line of credit just in case you need some extra money in the future? Do you know the difference? The path of money flowing between the two sets of books is what Rich Dad called the financial fast track and the financial rat race. For one to exist, so must the other. Hence, there must be at minimum two financial statements. The questions are, which statement is yours? Which statement do you want to have? This is why Rich Dad constantly told me, making more money will not solve your problems if cash flow management is the problem. The people who understand the power of financial numbers have power over those who do not. That is why step 2 to finding your own financial fast track is, take control of your cash flow. You need to sit down and map out a plan to get control of your spending and minimize your debt and liabilities. Live within your means, before you start to expand your means. Take action. 1. Review your financial statements from step 1. 2. Determine which quadrant of the cashflow quadrant you receive your income from today. 3. Determine which quadrant you want to receive the bulk of your income from in 5 years. 4. Begin your cash flow management plan. A. Pay yourself first. Put aside a set percentage from each paycheck or each payment you receive from other sources. Deposit that money into an investment savings account. Once your money goes into the account, never take it out until you are ready to invest it. Congratulations! You have just started managing your cash flow. Be a focus on reducing your personal consumer debt. The following are some simple tips for reducing and eliminating personal debt. Tip number 1. If you have credit cards with outstanding balances, discipline yourself to use only 1 or 2 credit cards. Any new charges must be paid off in full every month. Do not incur any more long-term debt. Tip number 2. Come up with $150 to $200 extra per month. Now that you are becoming more and more financially literate, this should be relatively easy to do. If you cannot generate an additional $150 to $200 per month, then your chances for financial freedom may only be a pipe dream. Tip number 3. Apply the additional $150 to $200 to your monthly payment of only one of your credit cards. You will now pay the minimum plus the $150 to $200 on that one credit card. Pay only the minimum amount due on all other credit cards. Often people try to pay a little extra each month on all their cards, but those cards surprisingly never get paid off. Tip number 4. Once the first card is paid off, apply the total amount you were paying each month on that card to your next credit card. You are now paying the minimum amount due on the second card plus the total monthly payment you were paying on your first credit card. Continue this process with all your credit cards and other consumer credit debt. With each debt you pay off, apply the full amount you were paying on that debt to the minimum payment of your next debt. As you pay off each debt, the monthly amount you are paying on the next debt will escalate. Tip number 5. Once all your credit cards and other consumer debt is paid off, continue the procedure with your car and house payments. If you follow this procedure, you will be amazed at the shortened amount of time it takes for you to be completely debt-free. Most people can be debt-free within 5 to 7 years. Tip number 6. Now that you are completely debt-free, take the monthly amount you were paying on your last debt, and put that money toward investments. Build your asset column. That's how simple it is. Side note, Kim and I explain this process of reducing and eliminating your bad debt in our audio program, How We Got Out of Bad Debt.